Gold was $2,040 an ounce. As we're on the air now, it's $2,717 an ounce. It just went up again because of the low inflation rate, and they believe that the Fed will increase lowering interest rates. But that's only a couple of day thought, because more data is going to keep coming out. So again, the lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. Go back to Trump, the Trump card. He will do everything to keep the economy strong.
The precious metals market has been buzzing with excitement lately. Gold prices have skyrocketed to historic highs, moving impressively from $2,440 to an eye-popping $2,717 per ounce. Gerald Celente, a seasoned trends forecaster and the founder of the Trends Research Institute, points out that this phenomenal rally is driven by favorable lower inflation readings and anticipated cuts in Federal Reserve interest rates. Even with some thin trading conditions, the bullish momentum continues to shine through, as gold remains steadfast around the $2,700 mark at the beginning of the week. The shifting expectations surrounding monetary policy and currency movements are essential in shaping this market, providing an encouraging backdrop for precious metals. Celente underscores the vital connection between interest rates, the US dollar, and gold prices. He explains, when interest rates drop, the dollar takes a hit, and as the dollar weakens, gold prices naturally rise. This connection has been evident in recent trading sessions, with the US dollar experiencing some weakness as investors are drawn to riskier assets. Precious metals consistently show their traditional value as a safeguard against currency depreciation. The inverse relationship between gold, the US dollar, and Treasury yields makes gold an enticing option for savvy investors and central banks aiming to diversify their portfolios during unpredictable market conditions. This connection is especially relevant as market participants closely assess the Federal Reserve's predictions regarding possible interest rate changes. Celente offers a thoughtful perspective, reminding us to consider current market conditions with a short-term mindset. He points out that incoming economic data can considerably shift the landscape. This is just a short-term view, as more data will continue to emerge, he cautions. Before we dive deeper into this video, don't forget to subscribe to our channel. Hit that bell icon so you'll never miss an update, and share this video with friends or anyone who could benefit from it.
It just went up again because of the low inflation rate, and they believe that the Fed will increase lowering interest rates. But that's only a couple of day thought, because more data is going to keep coming out. So again, the lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. Go back to Trump, the Trump card. He will do everything to keep the economy strong. He's invested in it. From Bitcoin to buildings, to you name it, stocks, they want the economy to stay high. And you look at, he brought 10 billionaires into his club. They want to keep the economy up. The only way the economy is going to go up is with interest rates going down. So that's the way we're looking at things. You're looking at now, between now and 2026, 2026 rather, 2025, 2026, you're looking at over $2 trillion worth of commercial real estate loans coming due. There's going to be defaults on them. Let's go back to 2023. Remember Signature Bank, First Republic, and Silicon Conman Valley Bank went bust? Look what happened to the equity markets and gold prices. Equity markets were collapsing, gold prices. That was 3 banks. You got hundreds of banks that are going to see defaults on these loans. No one is talking about it. Right. It's not in any of the media. You go back to last year on 50th Street in New York. I mean, you know New York. You know 50th Street, Midtown, a building that was sold for I think it was $320 or $312 million back in 2006. Last year went on for auction and it was sold for $8.5 million. From $300 million to $8.5 million. It's in the middle of the block. No windows behind it, no windows on the side of it. Convertible, no, not to. They keep talking about they're going to convert this to apartments. No. The buildings built within the last 50 years, according to the data, are non-convertible. Going back, there's going to be an office building bust that nobody's talking about. And it's going to bring down the banks.
Reflecting on the pandemic, Celente described its impact as incalculable, attributing the inflation surge to governments printing trillions of dollars of fake money. He remarked, "Everything should have crashed, but trillions were injected into the economy." The pandemic hit employment levels hard and fast, with millions losing their jobs during the initial months of the crisis. However, there was a silver lining as employment began to recover a few months later. While jobs started returning, unemployment rates remained stubbornly high throughout 2020. The real turning point came with a gradual recovery in employment and significant government relief programs that helped ease the struggles felt during the summer of 2020. Most importantly, the pandemic reversed decades of progress in global poverty reduction. For the first time in a generation, global poverty rates increased, marking a significant setback in the battle against economic inequality. The crisis hit marginalized communities particularly hard, leading to disproportionate income losses that intensified existing disparities within countries and across borders. Now, let's get back to the core of the conversation.
Germany's in a recession.
Yeah.
Again, the third largest economy in the world. You look at India's numbers, they just went down. China's in deflation. They have a housing apartment crisis. What they got? But you look at the numbers between 60 to 90 million vacancies. And again, they caused this by themselves. When they started the COVID war on Chinese Lunar New Year, the year they're at, January 2020, and 3 years of zero COVID policy. 3 years. They destroyed the lives and livelihoods of hundreds of millions. Oh, let's go back to this COVID war too. The damage it's done is incalculable. The inflation, that was brought to you by the COVID war. Everything should have crashed. No, don't worry about it. Here's trillions of dollars of fake money backed by nothing and printed on nothing. That's what brought the inflation up. Hey, don't stay home. Here's money. Again, the damage here, nightlife, where I am up in Hudson Valley, they call it the Hudson Valley, they call it Death Valley. 9, 10 o'clock at night now, it's dead. Down the city, it's not the same place anymore. I ask the cab drivers every time I go down there, when's it quieting down? Around 12:30 at night. And again, you got to look what's going on. Europe is in a very, very dangerous place right now. And you mentioned before about Trump getting rid of the bureaucracy. That's what's killed Europe, the bureaucracy. I used to spend a lot of time in Italy. It's one of the most bureaucratic places around. And Germany's right there with it. They're killing businesses. And bureaucrats are the low-life pieces of crap that you can find anywhere. Bureaucrats, these are people that can't get a job in the real world, that suck into the political system and become the most arrogant. Oh, and they get all the benefits when they quit working after a short time. They're destroying the economy in a country near you, city, state, all over the world. And so it may be very positive what Trump does in getting rid of a lot of this bureaucratic crap. America has all the human and natural resources to be self-sustaining. You take a country like Germany, the third largest economy in the world, the largest in Europe, they're in a recession. They're not very good in the AI field, are they? No, they're not. And the ones that are in AI, they're moving to America. So we have the human and natural resources to make this possible. Will it bring up inflation? Yeah, it will. But will he stick by what he says and put the tariffs on what he says? So we don't know. And then you look at the geopolitical side. Look what just happened with this, the possible ceasefire in Gaza. And it was brought to that guy, Whitecliffe, whatever his name is, that the Middle East envoy that Trump brought in his cabinet, not the Biden administration. So will this happen? So now it's a toss-up, by the way, as we're on the air. Now they're saying, again, this just came out before we went on the air from CNN. Netanyahu makes rare political error complicating approval of Gaza truce. And they go on to say that he faces a stark choice give into extremist right-wing demands to return to war after 42-day ceasefire, or accept support from the political opposition.
Gold's impressive rise is intricately linked to several critical factors, including rising inflation rates, currency declines, and shifts in global monetary policies. The dollar loses its strength as interest rates drop, propelling gold prices upwards. While immediate market reactions are shaped by prevailing sentiments and expectations, ongoing economic data and global events will undoubtedly continue to influence gold's direction. This highlights its timeless role as a haven during uncertainty, financial instability, and economic turbulence. Where do you think gold prices are headed next? Share your insights in the comments below. If you found this video valuable, please like, share, and subscribe for more updates. Don't forget to hit the bell icon to stay notified. Thank you for watching, and let's keep this conversation going.